Hi there, welcome back to Market Fatafat. Thanks so much for staying tuned to ET Now. Let's now bring on board Nilesh Jain, Head of Derivatives and Technical Research at Centrum Broking, to give us a tech check of the stocks that he has picked out. Nilesh, good afternoon and thanks for joining us on the show. Your first stock that you've picked out for us today is Polycab. In the last 6 months, the stock has done pretty well. We did see some dip coming in, but last 1 month, the stock seems to have recovered once again. Do you believe that this upward trajectory that the stock is now on will continue going ahead? And if so, what are the levels that you're spotting?
Very good afternoon to you. Good afternoon, everyone. So this particular stock has been one of the outperformer. If you just pull up a weekly chart, year on year, we have seen this particular counter has been in an uptrend, and recently we have seen an uptake with a breakout. In spite of weakness in the market, this particular stock has been one of the outperformers. And today it has given a good breakout on the chart. Good build up on the long side is also happening on derivative front. So it looks like it is heading towards 7,700 to 7,900, or quite possible that it may touch the levels of 8,000 as well. So it's a good bet at current level, can be added on declines as well. Keep a stop loss below 7,300, and on the upside the target comes around 7,700 followed by 8,000.
Alright, moving on from Polycab to another pack, in fact, that's in focus today and reeling under selling pressure. Really taking it on the chin today is the metal pack. In fact, if you look at the companies that came under selling pressure, JSW Steel, Tata Steel, NMDC Sale, they were all down almost 3 to 5% in early trade. Tata Steel seems to have recovered, and so has JSW Steel as well from the day's lows. But the broader sell-off in the metal stocks also pulled the Nifty Metal Index down by almost 2.5%, marking the worst performing sector so far. The drag in the metal names came in after investors assessed China's stimulus plans as it aims to revive the sluggish economy. Now, this comes after the conclusion of a high-level economic meeting where China reaffirmed its recent policy shifts and stressed on plans to boost their growth. Now, a bounce back of Chinese economy, the worst, which is also the biggest importer of metals, that drives much of the metal demand globally and thereby has a significant impact on the metal prices as well. And on the back of that, the Indian steel and metal companies are in focus today, declining in trade with cuts of almost 3 to 4%.
Okay, not looking very good for the metal pack today on the back of everything that's been happening in China. But Jinay, you've picked out cements for us. Now, this is the third consecutive day where we've seen a brokerage note come out on the cement space. Different brokerages have been echoing their views. Tell us who has come out with a note today and what's their view.
Well, definitely cement stocks are in focus. We have a note by Jefferies where they say that the dealers have confirmed that the price hike have taken place of 8 to 12 rupees per bag for December and January month. Now, if you look at the total price hike, it's about 3% month on month basis. Also, the demand growth has been moderately improved and recovery should improve into Q4 as well. And this is mainly because of the revival in government capex in H2 that is expected by many of the brokerage houses. Also, the top players are cutting incentives in the industry, and new commissioning will help companies' prices keep on sideways basis is what Jefferies is believing. They like two particular stocks such as Ultratech Cements and JK Cements, so definitely these both counters will be in focus.
Cement back in focus today and holding up pretty smartly also right now, both of those cement names. But let's shift focus and talk about another stock that we're just getting an update about, and SpiceJet is the one that we're talking about. This stock seems to have taken flight right now because very sharp spike coming in on the stock on the back of the news flow that SpiceJet has cleared all pending employee provident fund dues amounting to slightly more than 160 crores for the last 2 years. SpiceJet has also cleared all pending statutory liabilities including their TDS, GST as well as employee salaries. Very positive news. So you can see the spike on the stock coming over there as well. 1.5% higher is where the stock is because the company has said that the clearance of these dues will help them save significantly on interest payments. Now also remember, SpiceJet had recently raised 3,000 crore rupees via a QIP and has been utilizing the funds to clear dues and revival of the airline's fortune. Now this move strengthens balance sheet going ahead and also drive financial turnaround and substantial savings on costs. So very positive news flow. Stock is reflecting the sentiment on the street right now on the back of the dues repayment coming in by SpiceJet, holding up 1.5%.
Alright, moving on from SpiceJet to another strong buzzer in trade, Bharti Airtel, that's up almost 4% in trade. In fact, it's jumped to its 7-week high, Nilesh. It's trading at 7-week high. Tell us what you seeing on the charts for this mover. It's moved pretty well. In fact, in the last 1 month also it has moved alone 8% from here on. Where do you see this counter headed?
So very strong chart pattern here in Bharti Airtel, not only technical front, but also if you look at derivative data today, close to 6% fresh OI addition can be seen. So good long build-up is happening back to back. Second days of gain with a good technical breakout. The stock has surpassed its 50-day moving average as well. So as of now, it is trading well above its key long-term and short-term moving averages. The upside seems to be open for a new record high. So the previous record high was somewhere placed around 1773, and from current level we can expect another 100 to 150 point move. So immediate target would be 1740, and second target would be somewhere around 1800. It's a good positional buy as well as a trading bet. Keep a stop loss below 1620, and yes, it can be added at current level and also on decline.
All right, moving on from Bharti Airtel to another one that's in focus today, and that's Reliance. That stock fell almost 1%. It's down 0.8% right now, even as the company has signed a deal to import crude oil worth $12 to $13 billion a year from Russia's Rosneft for 10 years. Now, agencies have reported that the Russian state oil firm Rosneft will supply up to 5 lakh barrels per day, which is 25 million tons a year of crude oil to Reliance. And this deal is, of course, for 10 years, and the current price is worth 12 to $13 billion. On the back of that, RIL is gaining in trade. I'm sorry, it has gained from the day's lows. It has picked up and it is gaining with gains of 0.8%.
Okay, looking good for RIL. That's a major nifty heavyweight over there. But Jinai, you've picked out Ashok Leyland for us. I believe it's a positive news though, at least for the company coming in. Tell us what it is.
Well, definitely Ashok Leyland is in focus as the company has bagged an order. This is for supplying of 1,475 BS6 diesel fuel type passenger bus chassis. This order is from Tamil Nadu State Transport Corporation, and the total consideration of this order size is about 356 crores with an execution timeline by May 2025. Now, apart from this, the company earlier today also announced a price hike for increase up to 3% across all their commercial range of vehicles, and this will be effective from January 2025. So on back of this news flows, Ashok Leyland is in focus, and it has recovered quite smartly from the lows and currently trading up about 3.3%.
Okay, Ashok Leyland doing well for itself. Let's talk about a stock that's been in focus since morning on the back of two news flows. Remember, the first half of the trading day, Zomato is the stock we're talking about. This one was deeply under pressure because this food delivery giant has received an order from the Joint Commissioner of CGST and Central Excise of the Thane Commissionerate in Maharashtra, demanding GST of 401 crores with interest as applicable, and on top of that also a penalty of 401 crore rupees, making the total demand order worth 803.4 crores. Now, Zomato is confident of its position and will fight the case. Now, while that was a negative news flow, the reason why the stock has recovered today amid a market that has also largely recovered is that Zomato's quick commerce arm Blinkit has launched a Bistro, a new food delivery app, and Bistro will deliver snacks and other food items in 10 minutes. This launch, remember, comes just one day after Zepto announced that they will be launching a separate app for their Zepto Cafe next week. This app aims to take on Zepto Cafe as well as Swiggy's recently launched quick delivery service Bolt. So, well, you have another player that's going to be entering the 10-minute food delivery space, and now Zomato has made its mark over here with Bistro as well. The stock holding up pretty smartly, almost 0.8% higher.
All right, moving on then to Titan. That's the counter that you picked out for us. Nilesh, tell us what you see on the charts for Titan. I mean, in the last 1 month, it has given a 9% gain. In the last 6 months, it hadn't moved much. Last 1 month, this counter has started seeing the up moves. Tell us from here on, where does this go?
So Titan, it looks like it is forming sort of a rounding bottom formation here on daily time frame chart. The stock today not only surpassed its short term but also its long term 200-day moving average, and it is on the verge of another breakout which is placed at 3500. But looking at the overall structure, it looks like it is heading towards 3600 to 3670. So these are the immediate short term targets for Titan. Stop loss can be placed below 3420. Overall, technically, the stock is looking strong on the chart, not only on daily time frame but also on weekly time frame. The momentum indicators and oscillators have given a buy crossover as well. So yes, Titan looks positive for 3520, 3600 to 3670.
Okay, Nilesh, thanks for that view coming in. Let's shift focus and talk about the sugar space, because the ISMA has given its recommendation to the government's call for suggestions on its ethanol blending roadmap beyond 2025. They have shared a detailed roadmap to the government, and Sameer Dikshit, my colleague, is here to take us through all of it. Sameer, give us all of those details.
So definitely government is moving forward to achieve the 20% of ethanol blending target. 18% is the current year's target, which they are almost near to achieve, and for 20% also they are moving forward. But yes, there was an interministerial meeting that was held last 30th of November, and in this interministerial meeting, the ISMA, which is the sugar and biofuel body, they have given a detailed submission in terms of the policy support that they are seeking from the government, and also the other steps which government might take in to further push the entire industry, and the important one is the stakeholder. So some of the important recommendations that have been made in by ISMA, that includes a support of interest subvention scheme. They have requested that targeting subsidies of around 35,000 crore. This will create additional 770 crores of ethanol production capacity in the country. So that sort of interest subvention support they have urged. Tax reform is the second big step that the industry is looking at, and they have urged the government to reduce GST to just 5% for the for FFVs, flex fuel vehicles, and also for the other hybrid vehicles. So GST to be reduced to just 5%, and this will give push not just to the auto industry but also to the ethanol industry, those who will provide ethanol for these fuels. They have also requested the government to provide support for the research and development, and for the same some sort of financial support can be granted. This will help to expedite the whole process. And lastly, the pricing mechanism is one important formula that industry has been requesting since a long time, and they have requested that a link formula based pricing of ethanol with fair price and remunerative for sugarcane that can be provided, and these all steps will help the industry to make more investment in the ethanol space, increase the capacity of ethanol production, and also what is the larger vision is that India should stand at par with the countries like Brazil, which have already achieved our ethanol blending of around 54%. That could be a realistic scenario for India as well.
Alright, with that it's time for us to slip into a short break. Come back, you're tuned into Market Fatafat, where we are taking you through all the buzzers in trade on the back of news flow and also on the back of technical charts. JK Tyres is one such name that is in focus today. Well, the company has informed that DEG has invested in JK Tyres and Industries a whopping 30 million euro loan for the expansion of production capacities in the state of Madhya Pradesh, India. And on the back of this additional capacity increase, JK Tyres is in focus today, currently trading with gains of 0.8%.
Positive news flow coming in for JK Tyres. Nilesh, once again coming to you, you've picked out a name from the IT pack, and that's HCL Tech now. Tech Mahindra was your pick earlier. HCL Tech is on your radar now. Tell us what are the levels that you're spotting for this chart, because last 6 months the stock has done pretty decently for itself. A roughly 35% uptick coming in. So tell us what are the levels that you're watching for ahead, and do you believe that the run that the stock has had, albeit it's been a steady one, but do you believe that this can sustain going ahead?
So first of all, if you look at the Nifty IT index, which is constantly trading at new record highs and one of the outperforming sector, and if you see within this Nifty IT pack, the large cap have led the entire run up. HCL Tech, one of the outperformer within the IT pack, and constantly forming a habit of formation. Today as well, it has hit a new record high. So overall structure is looking very strong. Any dip can be used as a buying opportunity. Good portfolio stock. We believe that there is still some more room left on the upside for this particular counter towards 2000 to 2050. So this will be the target on the upside. Stop loss can be placed below 1935, and it's a good buy and decline kind of structure we can see in this particular stock.
Alright, moving on from HCL Tech to Indian Oil, Janai. It's powered by a brokerage note today, a note by Jefferies. Tell us, what does the note say and how's the stock moving accordingly?
Well, definitely Indian Oil is in focus. We have a note by Jefferies, who have upgraded the stock to buy from the earlier rating of hold, and the target price is 185. Now the refining to strengthening in CY 25 on accelerated capacity closures. Also the demand remains healthy is what they are noticing. Also amongst all the OMCs, most levered to refining margins improvement owing to the highest refining market ratio is what Jefferies believes. And in terms of risk to reward, they believe that it's turned favorable after a recent correction of 20% in last 3 months. Also, the stock is trading at a steeper discount if you compare to Nifty's long-term average valuation. And on back of this, IOC is in focus, and if you look at stock price, currently it's scaling up upwards of more than 2%.
Okay, very good move coming in on IOC. Nilesh, you picked out Bajaj Finance for us. Now, if you pull up the charts, last 1 year YTD, the stock has not done much. Even last 6 months, the stock has been pressured. However, last 1 month, we have seen some kind of move coming in on the stock. Tell us what's the outlook going ahead, and is this how you would play the entire financial space?
So within entire financial space, specifically NBFC space, it looks like there will be a kind of a base formation going forward. And within this pack, both the Bajaj twins are looking strong on the chart. Bajaj Finance, specifically this particular stock, in fact, in last couple of trading sessions, we have seen a strong rebound coming in from the lower levels. Kind of a triple bottom formation can be seen somewhere around 6,500 levels. And it looks like it is forming strong bottom as well on the daily time frame chart. So overall structure is looking positive, looking strong for 7,400 to 7,500 from a December series expiry point of view. 7,000, which is today's low, is likely to act as a strong support, and yes, can be added at current level and on declines, keeping a stop loss below 7,000. Bajaj Finance can be bought for 7,400 to 7,600 target.
Okay, 7,600 on the upside is what Nilesh is spotting of Bajaj Finance. Let's talk about a stock that has been doing well ever since the opening bell, even when the market was deeply under pressure. And right now, also very good moves coming in across Swiggy, 4.5% uptick right now, because Swiggy has forayed into live events in the going out space. Now, Swiggy has just last night launched its new feature called Swiggy Scenes under its Dine Out offering. This new feature will allow users to book parties, events and live music at Swiggy's partner restaurants. Now, users can currently book events ranging from New Year's celebration to Christmas parties to live music and culinary experiences on the app. And this new launch comes only a couple of days after Swiggy has very recently launched its premium invite-only membership platform, Swiggy One Black. So yet another positive news flow coming in for Swiggy on the back of this news flow. They have solidified their presence, if you could call it that, in the entire going out and live events segment. Remember, Zomato already has very strong presence here via its newly rolled app District. They've also acquired Paytm's ticketing business recently. Swiggy also making moves in that segment now, and on the back of that, that stock is up 4.4%.
All right, Swiggy in focus today on the back of that news flow. But coming to you, Nilesh, Ultratech Cement is what you've picked out for us. Tell us what you're seeing on the charts for this one. The entire cement pack, was really under pressure. But the kind of move that this one has given in the last 1 month. Do you see this going up from here, and where do you see this headed?
So overall outlook on cement pack is looking strong from a short to medium term point of view. The kind of rebound that we have seen across all cement stocks within that particular space, Ultratech Cement being one of the outperformer. It looks strong on the chart. It is on the verge of a multi-month breakout. So the breakout is placed somewhere around 12,100, 12,200 zone. Looking at the overall development, recent development, specifically when the counters have surpassed all key short-term moving averages. So looks like it is heading towards 12,600 to 13,000 zone. And today, if you see the derivative data, close to 4% OI, fresh OI addition can be seen, that too near all-time high. So that is certainly showing that inherent strength in this particular stock. So can be added at current level for upside target of 12,500 to 12,800. So these are the position targets, and stop loss can be placed somewhere around 11,700.
Okay, that's the view coming in on Ultratech Cement. Jinay, you've picked out MOIL for us. Once again, brokerages are back in action. Tell us what the note entails.
Well, yes, we have a note by Antique who are maintaining buy on MOIL, and the target price is 451. They believe that the medium-term pricing support will aid stock as well as volume growth, which will support margins for the company. Now, management's outlook for FY25 production target is about 2.1 million ton, which is a 20% higher Y-on-Y basis. Well, Antique believes that the higher capex will deliver higher volumes, and to meet the long-term annual production target of 3.5 million ton by 2030, the expected capex would be about 2,400 crores. On back of this, MOIL will be in focus.
Well, with that, we are completely out of time on this edition of Market Fatafat. Jinnah and Nilesh, thank you so much for joining us and taking the time out. Thank you so much. We will let you go on that note. Snehi and I will also take your leave. Thank you so much for tuning in. Don't go anywhere because closing trade is coming up next.